Well, it's been a tough week. I mean, this has been a victory for those who've been bearish.
Well, that's Tom Lee. Tom Lee is one of the most popular people on CNBC. Tom Lee works at Fundstat. He is an analyst. He's a perma bull. I've never seen Tom Lee bearish on anything. He's always saying buy the dip, be very bullish. Every little dip you have to buy. And of course, when the stock market goes down, like it's going down right now, people look for Tom Lee for some hope and some hope that things will bounce. And I want to react to Tom Lee's commentary on CNBC. And also, financial media always gives you news, but they don't give you the trade. That's why you have Uncle Tony. Uncle Tony, at the end of the video, I'm going to give you trades based if you agree with Tom Lee or if you don't agree with Tom Lee, because what's important here is to monetize your brain, monetize the information that's coming into your screen, into your phone, into your computer, and try to make money off of that. Alrighty, so let's listen a little bit more to Tom.
But to me, this is also a reminder that the stock market and investor views about equities really depends on FANG. FANG didn't do well this week in earnings, and it really sort of took some of the support out of stocks. Do I think the FANG thesis is changed or broken? I mean, I don't think so. To me, if someone hasn't owned FANG all year, this is a chance to get in.
But the thesis can be intact, right? That these are the places you want to be. You can have that while still saying, you know what, the stock's got too stretched and their valuations got too rich, and now it's time for a pullback.
Yes. I mean, we're down 10% from the highs for the S&P. So I think a lot of bad news is baked in, but we've also done, as you point out, a lot of technical damage, and people don't like the 10-year at 5%. I mean, this is why next week is pretty critical, because we do get some pretty important data points.
I mean, momentum's a dangerous thing at times, right? I mean, you can say, well, it can carry you when the times are good for these FANG names. And that was one of the criticisms the whole time. It's 7 stocks and 493 stink. And then now it's 493 still stink and the 7 look dicey. That's a problem.
It is.
Well, you see, they're telling the story of the S&P 500 this year. 493, I would say 492 stocks look bad, and only 7 stocks look good, and that is a problem. Let's take a look of what they're talking about here. You see here, I have the 8 more popular stocks on the S&P 500, and as you can see, year to date, Nvidia is up 177%, which is absolutely craziness. Then we have Meta 146% up. Then we have Tesla 68% up, even with the recent pullback, which is unbelievable. Then we have Amazon 50% up, and the worst of the best is Apple, still up 29%, even after the last sell-off. So as you can see, the stocks are up a lot. Of course, the last month, the last week, they've been down, but that's what they're talking about. These stocks are keeping the S&P 500 up. They're keeping the NASDAQ up. They're keeping everything up. And when these fail, and they're starting to fail, things might get. Also, and another important consideration about the FANG or the Super 7 or the Super 8, earnings have not been that great for these stocks. Also, they're 10% off their peak at least. And the 10-year yield, which is the main competitor to stocks, is at 5%. So with no real risk, you can get 5% of your money. And I think that's affecting stocks very, very much.
And may remain such.
Yeah, I've got a contrarian take on earnings. Number one, if you look at the stock market reaction of those that beat, they're up 0.5%. That's better than Q1 and Q2 of this year. So actually, we're getting better reactions. It's just like you said, it's more in the 493, not the FANG.
Well, so here's the issue. It says that the earnings, what Tom Lee is saying is the earnings in the 493 or 492 stocks have been actually better than the earnings on the FANGs. This is another problem because, as you can see, the FANGs are keeping this market up. And if the earnings are not going to be there won't be anything to support it, because at the end of the day, stocks reflect the future cash flows of companies' future earnings. So if the earnings are coming down, the stocks have to go down.
You're right. I think there is a view that the Fed is running out of patience. They're like, look, when are we going to break the economy? But I think the maybe the more subtle point is I think the Fed would like to see the labor market slow down, because we know underlying the two big drivers of inflation are housing and autos. They've slowed, but the job market's still strong. Next week is the jobs report. If it's a little soft, I think that takes the edge off. And of course, next week we get the FOMC meeting. And again, I think that they're going to be patient, because a lot of tightening, especially 5% 10-year, is already going through this pipeline. So I think the Fed can actually be patient.
Sure, but no. Now, I agree with you that the backup in rates has given them the flexibility to be patient.
Well, here is another important point. The Fed is running things right now. If the Fed is hawkish, stocks won't behave well. And people who want their bubbles back, like Tom Lee, CNBC, everybody on financial media, everybody wants their bubbles back because everybody wants to see their assets skyrocket. And of course, everybody, which is crazy, they're rooting for bad economic news, because bad economic news will force the Fed to pause or even start cutting rates. So what Tom is saying is, if we have a bad jobs number, that will give the Fed some cover to pause and to be patient. And but I'm scared of that scenario.
You're still a Bitcoin bull?
Yes.
I want to end our conversation on that, because I think it's the best performing asset class of the year.
Yeah.
Certainly one of them. It's up more than 100%. So what's your view of it here? And why has it been going up the way it has been recently?
Well, there's a couple things. One is it's been real buying. So there's real money institutional buying. We can see it in the CME volumes at all-time highs.
Mhm.
We know Asia has been buying again, and they've been absent. So this is true people wanting to get in. It's been a good sound money story, especially as we worry about Washington.
ETF optimism too? Is that where you're going to go also?
Yeah, the ETF, I think, is far bigger than people realize, because, again, supply is going to be only 12 million a day after the halvening. ETF could be $100 million a day of demand.
Here is where I agree with Tom Lee. I'm also a digital asset bull. I consider Bitcoin, Ethereum, NFTs, etc., digital assets, because I think in the future, digital assets are to be very important, because millennials do everything on their phones, younger kids do everything on their phones. And why not, if you're going to own assets, the easiest way to own assets is going to be on your phone. Of course, that means tokenization and securitization of assets, which the Fed right now and the SEC and Gary Gensler and everybody is giving a pause to it. But I agree with Tom. Bitcoin has a market cap, only $500 billion. Gold has a market cap about 15 trillion. The U.S. stock market has a market cap about $40 trillion. And so why not? Bitcoin can go from $500 billion to $1.5 trillion and triple and go to 100,000, and still would be a very small asset. So here I do agree with Tom. Now let's try to make money with information we got. Let's see if we agree and we don't agree with Tom Lee. And I'm going to give you some trade ideas, of course, not recommendations, just ideas on how to monetize the information we just received. Let's go to our trusty Tasty Trade platform, which I have open right now. And first, let's talk about FANG. FANG, you can find most of FANG either on XLK or on QQQ, which is two very, very solid ETFs you can use to trade. One of the most popular ETFs to trade is QQQ. It's the NASDAQ. And if we want to use our Tasty Live commandments, we would go to the 45 days. We can see that December expiration is 48 days. And if we're bullish, the easiest, fastest trade we can do is sell the 345 put after this down move. It has a 64% probability of profit, 80% that we collect 50% of our money. It has a maximum profit of $1,000. We have a buying power of 6,800, giving us around, let's see, divided by 7. So giving us about a 14% return. So that would be the first trade we can do. We can do a more conservative trade. We can go to the here on Tasty. We can see the brown thing is the brown image is the expected move. We can go to the 322 strike, which give us a $428 profit on a 4,700. So that's like a 10% return in 2 months. And it also the QQQs can go down from 345 to 322, and we would still be profitable. Now, if those trades were very capital intensive, I can understand that. Of course, let's try to find trades that have a defined risk that can use less capital and can also help us if we are bullish on QQQ, of course. Let's go back to the Tasty Trade platform back in December. We can also go to the, let's say, the 30 delta, which we 330 strike put, and then I normally like to go 3 wide, 5 wide, or 10 wide, and see if we can collect a third of the width of the strikes. So here for a 5 wide spread, we are only collecting $1.10, and I would like to collect a little bit more. So I would move this. You see how easy it is to move strikes up on Tasty Trade. So I moved it to the. I'm going to move it down because I want round numbers. So I moved it to the 340, 335 bullish put spread, and here we would collect $159, and we were only risking 341, giving us a 59% probability of profit, which is right on my sweet spot. And it's a trade that's very doable because you're only risking $340 and you can make $150 with it. But now, what if you're bearish? What if you don't agree with Tom Lee? Let's take a look to see if we can find some bearish trades that won't kill the bank. The easiest trade to do if you're bearish is to sell a call spread. So here, as you can see, the most premium can be found around the at the money. Let's go to the 350 to the 355. Wow. Did you notice something? We're collecting $2.47, and which is 50% of our risk. Here on a $5 wide, we can only make or lose 5 points, $500. So if we're collecting $247, that means we can only lose around $250. So this trade has a 58% probability of profit. It gives you a little bit of short deltas, and it can hedge your long portfolio if you like it. Another trade that I like to do is what I call risk one to make one, which would be buying a long put vertical. For example, we can go in the money, buy the 350 put, and then we can go to the 340 put and sell that. So here we would be risking $4 to make $6, and our maximum profit would be $591, which is the difference between 10 and 409. And we would only be, our maximum loss would be the debit paid. So these are two bearish ideas. If you don't agree with Tom Lee, and if you're bearish and you want to hedge your portfolio, these are two very, very solid short delta trades that you can do. Lastly, so what about digital assets? What about Bitcoin? So unfortunately, the SEC has been, and FINRA have been very, very strict with digital assets. They're restricting the number of assets we can trade. They're restricting derivatives in Europe and in Asia. There are options on futures and on Bitcoin ETFs. In the US, we don't have a Bitcoin ETF yet. It's coming. In fact, that's one of the reasons the Bitcoin has been rallying, because of the rumors. And so if you are bullish on Bitcoin, you can go to /BTC and purchase one of those Bitcoin futures. Unfortunately, a Bitcoin future is around 2 Bitcoins. So here you would be needing $62,000 to buy 1 Bitcoin future. You have to be a big baller, of course, and if you don't have a lot of money to risk on Bitcoin, you can use a trust, Grayscale Bitcoin Trust, and this is not an ETF. This is a trust. It's its price is $25. I had been buying this at $12, $14, and unfortunately, it went up to 15, 16, and I took profits. I should have waited, because I am a believer that Bitcoin's going to go up. So if you want to risk a little bit less money, of course, you can buy one share of GBTC for $25.31, and that way you can go long Bitcoin, either with the future if you have a lot of capital to use, or with a trust, which is the closest thing we have to an ETF right now. Well, I hope you enjoyed this segment that we did. It's important to keep reading a lot, watch everything you want, watch the news, watch Tasty Live. But in order for us, what's important for us is to make money. How do we make money? We make money monetizing our brains and our assumptions. Of course, everything you read, everything you see will give you a bias, either a bullish bias, a bearish bias, or a neutral bias. And the important thing is how to execute mathematically correct trades to match your assumptions and make money. And if you want to grow your pile, follow Uncle Tony, and remember, you gotta risk it to get the biscuit, baby.